Today is Friday, November the 20th, and this is recorded before the market. So it's now 8:41 a.m. You can see the McClellan oscillator came down to a higher low. So we have 1, 2, 3 higher lows. We're at the overbought area again, which should cause the market to stall, and that is what we're seeing. But I just want to cover three things: the S&P, Apple, and NIO. Here's the S&P with an overlay of the VIX volatility chart, a daily chart. And you can see that when we had the coronavirus issue, we had the volatility spike, we had the market drop. Ever since then, the market volatility has been muted. We got a little bit higher here, but still not as high as back in June, and that caused this little drop here. But what we see overall is just a decreasing or a dampening of the fear index, the volatility index, which should indicate that the market has the potential to go higher. There is some shutdown and coronavirus fears, particularly after Thanksgiving or the 2 weeks after Thanksgiving. We might see a much higher peak in this third wave. But if you look at the peaks that we've had, here's September the 1st. And then 15 bars later, 15 trading days later, we came down to make this low. 12 days later, we didn't quite make a new high. 14 days later, we came to a higher low. So here we had a lower high, a higher low, and then we finally were able to crack it, but not to close 6 bars after this one. And then 5 bars later, we actually did close at a new high, and now we've pulled back for support on the 8 EMA. So what we're seeing is an opportunity to go higher. That's certainly where we're going. And if we were to draw a trend line here, we could see a nice trend line there with this exception, but there are no exceptions. So, we really don't have a trend line there we can look at. Now let's take a look at Apple. Apple, look at the Chiku span right here. Yesterday's Chiku span ended up right below the candle. This is what we thought. We thought going into here we needed price. Remember we said we needed it to jump up above 125. Well, that wasn't going to happen. So what happened? We ended the day right at the wick of the candle. And we did that again, but right at the body of the candle yesterday. And with the price, and with the price inside the cloud and the 50 simple moving average dropping, we can expect to have pull towards the top of the cloud, but we should spend some time struggling in this cloud. And that's why yesterday I closed my December 117 puts and the 115 puts, made a modest profit, just $300 or $400, but I just see a lot of nothing happening, and I wanted more out of that premium than just time decay, so I got out of there and would wait for an opportunity. Maybe it's going to come down to the 50 EMA right here, and that might happen in conjunction with the cloud out here on December the 1st, so I'm going to keep a look at that. The last one I'm going to look at is NIO, and NIO is a day trading stock. So here is the 15-minute chart with Woody's pivots overlaid all of it. Try it yourself and see just how accurate the Woody's pivots are, and as a point of reference for where the day traders are placing their buys and their sells. So if you're day trading, use the Woody's pivots and also use a Fibonacci between the prior day's high and the prior day's low. I showed an example of that in a video a couple of days ago. So we haven't seen Woody's pivots yet for today. We'll see them at 9:30 and we'll see where we're going, but we can certainly see yesterday that resistance 1 proved to be a magnet for quite a period of time, and then we drifted up towards the end of the day but didn't make it to resistance 2. So take a look at that today. I am sitting on NIO. Yesterday I rolled my 43 calls, which were expiring tomorrow. I rolled them into December the 4th, gave them 2 more weeks because next week is a short week. So there's some free time decay in there. And I was able to pick up an additional, I think, a couple of bucks on on the premium. So that on 5 calls, that's $2,000, and I think 43 being right down here where we had a prior low is a pretty good area for long-term support. So I felt comfortable in just holding on to those. Very low risk, in my opinion, to pick up another $2,000 of profit. I also have some stock that will expire today with the 41 calls. I'm not going to roll those. I'm just going to let those expire and take the profit. But I am going to buy probably another 500 shares because I'm expecting to lose those by the end of the day. And I don't know what covered call I'll put on top of those. I'll probably take not next week's calls, the 27th, but I'll probably take December the 4th. Again, because next week is a short week. Depends. I'm going to look at the premium at the time and decide. But I'm looking for, I'm going to set an alarm right here at 47.55. And that's where I would look to see support and an opportunity to buy.